Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report. I am Frank Ochoa, aka PivotBoss, with analysis for today's session, January 27th, 2016. Here's a look at the daily time frame of the ES. We've had that major tail event we've been talking about for some time now, which was here. Long tail event. We had prices rejected at and below the composite low volume node of 1846, and then we saw a push higher and then a pullback and another defense and a bounce. Now, of course, this market looks very, very heavy right now. With this tail event, everything's happening the way it's supposed to happen in terms of bulls defending. The only thing is you're not really seeing bulls get paid big time here. You're not seeing really that push to the upside like we'd like to see. So that really starts to bring in a little bit of caution here because, again, as I mentioned last evening, or last afternoon, if prices can't hold above these 46s and bounce the way we think they can, we're likely going to see a major run of those downside sell stops below 46s. So this is very important right now. You have a range here where we've really had a high range, a couple of sessions here back and forth, but we really haven't gone anywhere to speak of. So prices really need to get above 1900. Beyond that level really opens up the upside targets back toward 81.5 with scaling points at 21, 39, and 50.5. We still have an upper trend line right here that we've been watching in the trading room that continues to hold, and that's really the line right now that the market is watching here. It appears as the prices are just kind of holding on that level, and we're now currently sitting above 1879. So short term below 79 opens up a return back toward the CLVN here. Any retest still offers an opportunity to defend. Failure to hold 46s opens the door to new lows. Taking a look at the intraday time frame, you can see here as we head into RTH trading, the big thing today is the FOMC statement and the Fed interest rate decision coming online later on this afternoon. We also have crude oil inventories in about an hour and a half or so. And what you have here is basically prices coiling ahead of those events here. So you can see right here the average daily range, and then you can see currently you're trading 25%, 23% of ADR here. You've been averaging 142 points on a 10-day basis in the NQ, and you've only seen 33 points overnight. So very quiet ranges as we head into those events. Could be a very quiet trading day ahead of the 1 p.m. announcement Central. So something to watch. Short term, 1879 is the key level right here for the bulls. You want to continue to defend that zone for squeezes higher. Failure to hold it opens up a return to 65. Okay, taking a look now at crude oil. Here's crude oil in a daily time frame. If you look at this, it's very similar to what you're seeing in the ES. A lot of range, but nowhere really to speak of. Hasn't really gone anywhere. Not as an emphatic a bottoms as we've seen in the ES and NQ. But nonetheless, you see the downtrending market, you see the pullback to the PIMAs, and you're seeing defenses off the previous week's high. I've been adamant that this is more of a selling opportunity up here for a likely continuation lower, but there's no doubt there's a striking resemblance here to the ES, the NQ, as a lot of market correlations going on among the three. I would say failure to hold above 3014, which has been the key level this entire time. I said 3014's here. I didn't think this was a significant bottom, but if prices can continue to hold above 3014s, you could see another bounce up. But failure to hold that zone in general opens the door to another round of weakness ahead. I would say bears need to continue to defend 32.35, the previous week's high price, which continues to be the case. First shot at lows above that level squeezes back to 35.25 and beyond. So if we look at the intraday time frame for crude oil right now, you can see we've kind of had a reversal after price rallied toward the 100% expansion target here from yesterday morning's impulse range. Since then, prices come all the way back into that range and is still holding the upper half of that distribution. Right now, we have a clear range that's building out. That's probably the range to fade here short term for bounces and reversals back and forth until we see expansion from the range. Let's take a look at gold. Gold, of course, we talked about gold likely squeezing ever since we had this event right here. I mentioned the goal was to see a move into this target and this target and this target. And then once we squeezed higher, I said any pullback likely to be defended for a continuation. So we've seen that play out very nicely according to our analysis. The rounded bottom continues to be in full effect. And then you see the latest squeeze here beyond the 1110s. So I would say that that behavior right here, as long as bulls can continue to defend 1110, that suggests a continuation higher. We could see 1130 with a shot to see 1169 over the next month ahead if prices can continue this pattern. Looking at the NQ now, you can see the NQ here rejected off those lows exactly the way we mentioned before. Nice rejection here, a nice retest opportunity which led to a quick squeeze, and then it failed off of the 38% fib level. This fib level is here really to find the midpoint of the range, because off of this low the expectation is that we're going to test the midpoint 43.40, and so far that's working out to our favor. Obviously we had this big shakeout event, but prices remained above the major CLVN at 40.72s, which implies further upside price discovery likely to that 43.40 rather, with a shot to see a continuation into 44.50. Now any failure to hold short term above this 41.74 could open up a quick return to 40.72, and failure to hold this level on a bounce would suggest a continuation downward to new lows. So very similar patterns here across the board for the ES, the NQ, and crude oil. We're going to continue to watch these patterns because these major 4-day ranges here that are building out ahead of the FOMC statement could be the ranges that we watch for significant expansion ahead. All right, that's it for now. Let's see how this thing plays out into the rest of the session. Good luck and trade well.